continuing to hunt and find them and kill them, and we will continue to do so. So they still retain some capability. And we have layered defenses throughout the region that will allow us to protect those. And we're working with our partners across the Gulf region to help them improve any defensive capabilities that they may need.
To that point on capabilities, Iran is an energy-rich country, could be, should be. Instead, like so many other places driven by a radical ideology, they've spent that money instead of investing in their people. And that's why you had millions of Iranians protesting. It's because they felt like their quality of life didn't match what it could be or should be. And what was the Iranian state? There's a reason we call Iran the #1 state sponsor of terrorism, because they took the money they make and they invest it in tunnels. And they invested in missiles, and they invested in launchers and UAVs, and we are destroying and degrading that in historic proportions. But it doesn't mean they won't still have some and try to hold people at issue, which is why we're fighting every single day to continue to compel. And you mentioned embassies and consulates. Unlike previous administrations, we are doubling and tripling down on ensuring that our people, regardless of their Department of War, Department of State, whatever they do, are secure in those facilities. And the best defense is a good offense. And so we're not afraid to go after and kill anybody, and we have a lot of them attempting to target our diplomatic facilities. Iran, we're not surprised that they would indiscriminately target, and we're still seeing that. Jerry.
As part of the justification for the war against Iran, the White House has laid out in fairly comprehensive fashion the Iranian regime's 47 years of terrorism aimed at the U.S., including pointing to the IRGC's provision of weapons and EFPs to help kill Americans in Iraq. The Pentagon in 2019 assessed Iran was responsible for the deaths of at least 603 service members in Iraq, but there hasn't been a similar public accounting by Iran's role helping the Taliban in Afghanistan. And that also hasn't been part of the White House's public argument. I was wondering if you could speak to Iran's role in helping the Taliban during the war in Afghanistan. And Chairman, as you and the Secretary eloquently spoke about, 13 U.S. service members have been killed so far during Operation Epic Fury. I was wondering what lessons have been learned from those deaths, both from Iranian strikes, from an aircraft refueling accident. How are those lessons being applied to the current conflict, and how are those lessons going to be applied to a potential conflict in Indo-PACOM?
Thank you.
Well, thank you for the question. And it's true. In a town that can have a very short memory, President Trump does not. He remembers what this Iranian regime was founded on, what their declaration has been from the beginning: death to America, death to Israel. They've stated that. They've intended to, in every way, try to accomplish that, killing Americans in any theater they can, embassies for quite a long time. In Iraq, that was the deadliest weapon, was the EFP, the explosively formed penetrator. I was there when that tactic and technique started to emerge, and the realization was it wasn't just jihadis putting together 155 rounds daisy-chained. It was an entire state, a country with its apparatus able to mold steel in a way that was specifically designed to penetrate American armor and kill Americans. This was not, maybe we send them a couple of thoughts about how to build a bomb. This was Iran specifically passing technology and wherewithal and personnel into Iraq to kill Americans specifically. I know the number is said to be 600. A lot of us think it's higher than that, given the amount of capability they brought in. So they have been at war with us, whether we acknowledge it or not, for 47 years. The same goes in Afghanistan. Name the Islamist enemy, whether they are Sunni or Shia, because this is a Shia regime, Sunni or Shia, and Iran's been willing to harbor them as long as that group is willing to try to kill Americans. So the enemy of their enemy has been their friend as well in the Islamist world. So Iran, whether it's Iraq, whether it's Afghanistan, whether it's around the world, has been targeting Americans. And what they wanted in this context, and what President Trump would not tolerate, is a regime of that nature being closer and closer to nuclear capabilities, a capability they would have said they would want to use, and we ought to believe what our enemies say they would do if they got the most dangerous weapon in the world. So it's been across every theater that Iran's been a threat to America, and sometimes we have to remind folks of that, but thank goodness we have a commander-in-chief who, on behalf of this country, has internalized that and said, hey, we're going to do something about it.
Jerry, I do want to talk about the lessons learned question because it's important to me. I won't share particular tactical lessons, and the KC-135 incident is under investigation. But I do want to talk about how I think about this and how we think about it. And this is something that I'm pretty passionate about. I believe the Joint Force has to be a very fast learning organization, early, often, and always. And so in each case, both at the strategic, operational, and tactical level, we've charged the Joint Force to look at themselves and say, what was our plan? Well, first, did we have a plan, yes or no? The answer is always yes, because we plan for literally everything. Did we execute our plan, yes or no? If we did it work? If not, why not? If we didn't execute our plan but did something better, what's the lesson learned associated with that? And then how do we quickly capture those lessons after every loss or every engagement and quickly adopt those lessons and then share them across the entirety of the Joint Force? And inside the Joint Staff, we've tasked our J7 Directorate under the lead of Lieutenant General Lazewski, a United States Marine, to be extremely entrepreneurial in harvesting and capturing those lessons in a proactive and not reactive way. In fact, we've got teammates from the J7 who are now spread out across the CENTCOM theater, both here in the States and forward, to ensure that in every opportunity we do not miss a chance to grab that lesson and quickly accelerate it into the practice that we adopt inside the Joint Force, so that if there's a loss or if there's something that we can learn from, that we learn it not only in the CENTCOM AOR, but we adapt it across all of the combatant commands, not just Indo-PACOM. And it's across all of the warfighting functions. I've asked them to look rigorously, to check our egos at the door, to remember this is about what's right, not who's right, and to be clinical around the way we look at lessons learned, because we owe it to the force to do that. Thanks for that question.
Absolutely. Brown jacket at the back.
Thank you, Mr. Secretary. Jonathan Dreyer with Roca Politics. As you said, at the end of this war, Iran will be without a missile or drone capability, a navy, or the ability to make nuclear weapons. Since the largest threat and sponsor of terror in the region will be incapacitated, are there plans to move assets and troops out of the Middle East? I guess in a perfect world, a year after the war has ended, what does the military presence in the Middle East look like compared to before the war?
Well, I appreciate the question. I do think when you address a real threat head on, it creates new options on the other side, right? I think what President Trump refuses to do, which too often this town does, is just sit in the status quo. Oh, nobody can do about that. They've got too much capability. What if this happens? What if that happens? He instead says, what's in the interest of the American people? It's going to take some courage. It's going to take some capabilities. We're going to have to gather some forces there in order to do it. We're not going to tell people how many or how long or what we're willing to do or what we're not willing to do. But if you do that and do that decisively, then out the other end is a recognition that it opens the aperture of what's possible. I mean, President Trump did the same thing in creating an opportunity for the Abraham Accords. Now you've got a situation where a lot of those countries are coming alongside us, recognizing the threat of Iran. So I think our posture in the future will be based first and foremost on our own national security, power projection, the ability to defend our people and our interests. But no doubt, working alongside our partners, the president will look at what makes the most sense going forward. I appreciate that question. Yes, right here.
War crime, is that the policy of the U.S. military
Excuse me,
now?
I didn't.
Thank you, Secretary Nexa. Two questions for you. The Vice President has often emphasized that the goal of this war is to denuclearize Iran while also avoiding a larger quagmire. I know that you touched on this. I'd like you to expand on how do you do that? How do you denuclearize the country while also avoiding this, forever war? And then there was a report last night that the Pentagon asked the White House for $200 billion for Iran war supplemental. Can you confirm this, and can you explain why a package this large is necessary?
Well, first of all, none of this would have been possible without Midnight Hammer, without that audacious mission with very clear goals that did obliterate their ability to enrich and the capabilities they have in those facilities. So it created the conditions for Iran to step forward and say, okay, you can reach out and touch us like that in our nuclear ambitions. You can see that we're still trying to do this. Let's make a deal. And President Trump put our our two best folks on it, Steve and Jared, and they worked diligently, earnestly. I watched it to try to pursue that deal. And ultimately, I think the whole time Iran sort of said, well, we'll talk as we build more missiles and as we build more UAVs and we create this conventional umbrella so that if we chose to, we could try to reconstitute the program. And sort of naively thinking that President Trump wouldn't do something about it. And that's why, as Secretary Rubio has said, and I've said, it's the conventional umbrella that was growing and growing and growing that was meant to protect that nuclear capability. So you had to address both what happened with Midnight Hammer and what happened with that as well. As far as $200 billion, I think that number could move, obviously. It takes money to kill bad guys. So we're going back to Congress and our folks there to ensure that we're properly funded for what's been done, for what we may have to do in the future, ensure that our ammunition everything's refilled, and not just refilled, but above and beyond. I mean, President Trump, as he said, rebuilt the military in his first term, didn't think he'd use it as dynamically in his second, but he had. So thank goodness he did that. And an investment like this is meant to say, hey, we'll replace anything that was spent. And now that we're reviving our defense industrial base and rebuilding the arsenal of freedom and cutting deals like our great deputy secretaries here is doing, long lead times on exquisite munitions, we're going to be refilled faster than anyone imagined. And I think, we're also still dealing with the environment that Joe Biden created, which was depleting those stockholds and not sending them to our own military, but to Ukraine, which is every time we reach back and look at any sort of a challenge we have, it goes back to, well, send it to Ukraine. Ultimately, we think these munitions are better spent in our own interests at this point, and this kind of funding bill is going to ensure that we're properly funded going forward. We'll take one more right here.
Thank you, sir. Thank you, Mr. Chairman. Jordan Conradson with the Gateway Pundit. So with the strike yesterday on South Pars gas field, if the U.S. didn't know about it or didn't approve of it, it kind of seems like a trend of Israel apparently pursuing their own objectives over U.S. objectives. I'm not sure if you agree with that, but the president has said he doesn't want to hit Iran's oil infrastructure right now. As you said, the U.S. avoided this on Park Island. Oil's nearing $120. Why are we helping Israel prosecute this war if they're going to pursue their own objectives?
We hold the cards. We have objectives. Those objectives are clear. We have allies pursuing objectives as well. And the truth speaks for itself. I mean, President Trump was very clear about that. Iran has weaponized energy for decades. Israel clearly sent a warning, and POTUS has made it clear, very clear. Iran knows when you hit Karg Island and you hit military capabilities on Karg Island, which is the only thing we hit, we can hold anything at issue, anything. The United States military controls the fate of that country. Iran has the ability to make the right choices. It should not, going forward, target Arab allies, Arab countries, trying to create pain, the pain that they created themselves. Thank you all very much. Appreciate it. Thank you for your time. Appreciate it.
You guys have any Marines?
No quarter comment, please.
Principal Asset Management says investors still need to be wary of taking any risk.
Unfortunately, as we're seeing with exposures across all markets, it's just too early to be making any key portfolio decisions when there is so much uncertainty on board. I would say that the escalation overnight has clearly increased the downside risks.
Right now, the S&P 500, 32 points lower, down 0.5%, 65.92 on the index. The Dow Jones Industrial Average down 235 points. The NASDAQ 100, 142 points lower. 2-year yields up close to 4 basis points at 381. 10's unchanged at 426. Let's get right to Brent up close to 4%. 111.44 a barrel. A WTI up 1.3%, 97.56 a barrel. And one of the standouts on the screen, European natural gas up 18%. They're setting a pretty high bar. Alibaba says it aims to quintuple cloud and AI revenue to $100 billion annually in 5 years. And I can't tell you how long I haven't been waiting for this. Labubu is coming to the big screen. Toy maker Pop Mart teaming up with Sony Pictures for a movie about the collectible early development project. No date for.
I feel like Labubu's had their moment in the fourth quarter, and we're
you
past
think it's
it.
faded?
I think so. I mean, I see all the stores carrying them and carrying knockoff Labubus, but I mean, how long does it take to get a movie together? It's not going to be for another couple months, right?
I'll wait for the book to come out. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
Hi, John Tucker. Thank you so much. We appreciate that. As always, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. Streaming live on YouTube and on Bloomberg.com. Stocks moving lower. John Tucker was just reporting. Let's take a look at some of the individual stocks on the move today. We can do that with Bloomberg News. Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, I want to start with one of the worst performers in the S&P 500. That is none other than Micron Technology, ticker MU. Really strong quarterly results when you look at the actual revenue growth that we've been able to see. Similar story, though, to NVIDIA, where the questions are around the future. Micron in particular laying out plans to spend much more than analysts were expecting. So now you're grappling with the debate that we've been kind of tracking for a number of weeks as it relates to memory chip makers. How much demand is going to outpace capacity? At what point does that kind of balance out, and what does that ultimately mean for some of these companies? So Micron right now down 4.5%. Size and scope, which we're obsessed with here at Bloomberg, nothing special. Worst drop since last week, so nothing too crazy.
All right, next stock.
Five Below. You were talking Labubu. Do you guys go to Five Below?
No, that's like a preteen kind of shop, right?
For the most part, it's a preteen shop.
Average Jersey saying yes.
Average Jersey saying yes. It also caters to. Well, I also liked when I grew up going to the 99-cent store when things actually cost 99 cents or less. Now it's like 99 cents is kind of a.
So Five Below is the idea that it costs $5.
$5 or below, but now it's like roughly 5 to 25. Anyway,
factors of 5, sure.
It's tough naming a company when inflation's going to end up impacting your business. Up right now about 9%, trades under the ticker 5, F-I-V-E. Highest level since August 2021. This has been quite the kind of renaissance, if you will. This is a company that really bottomed out this time last year with uncertainty around tariffs. Has been on an absolute tear, beating expectations, continuing to see comp sales beat what Wall Street was looking for. Also, analysts calling out that this is one of the many companies that could be benefiting from consumers downshifting their spending, so maybe trying to find the bargain bin opportunities, if you will.
All right, one more.
Keeping an eye on all things gold. We'll use Newmont to be the track
metals.
Metals are trading off. It's been a fascinating move. We were talking about on our desk how much of this sell-off, looking at gold in particular right now, it's down 10% in the last week and a half. How much of that is driven by fundamentals, uncertainty, or just the fact that we saw such a tremendous run-up in the commodity space? So keeping an eye on using Newmont as our lens to view that, ticker NEM, down right now about 7%, worst day since January 2nd. As gold goes, so go the miners.
Yeah, but for a while people were blaming the decline on gold on the stronger dollar. The dollar is weaker today by 1/3 of 1%, but gold continues to decline.
Yeah, and I mean, some people are saying, oh, well, now that inflation's tougher and we're also looking at a war that's potentially going to lead to higher oil prices, the knock-on effects, what does that mean for rate cuts? And if you're going to argue that gold should be an appreciating asset as rates come lower, how much of that is real? How much of that is just
time to reassess?
Exactly.
All right. Thank you so much. Bailey Lipschultz with our Stocks on the Move. And for more conversations like this, Subscribe to our Stock Movers Reports. Listen for our 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We had a Fed day yesterday.
We did?
Yeah.
I mean, in all the news flow, it kind of gets drowned out a little bit.
Yeah, and coming into this, I was just talking with Michael McKee. He was saying that for the most part, he didn't think it would be anything big. A couple of weeks ago, certainly we didn't think it would be anything big, but some news was made. Certainly, Jay Powell making clear that he is in no rush, or the committee is in no rush to cut interest rates. Ira Jersey is our Bloomberg Intelligence chief U.S. interest rate strategist. He talks to us about the Fed, about the economy, about rates and where they're headed. What surprised you the most from yesterday's news conference?
That it was probably the least important of the 17 central bank meetings this week.
That's right.
The Bank of England meeting obviously is what's really roiled the rates market today. So I don't know if it was surprising, but I think the clarity that Jay Powell said that he intends on staying on until Kevin Warsh is confirmed by the Senate. I think that was something that most people we had speculated about, but he can, the fact that he confirmed that I think is important. Will that have an effect on President Trump and what's his reaction going to be to that? I think is an open question, and clearly there's going to be a lot of debate about it. And then the other is his comment, and which really was what set the markets off, saying that basically oil was going to determine whether or not they cut interest rates again, right? If oil prices continue to go higher, that they probably wouldn't cut again, and that's where you saw the bear steepening the yield curve. So 2-year yields going up much faster than longer maturity debt.
You mentioned the Bank of England. Is the call there, Ira, that they held rates the same, but they said, hey, we'll raise them if inflation gets warranted?
Well, they basically implied 50 basis points of interest rate hikes, which, the market was pricing in for some chance of an interest rate hike over the next 12 months or so. But 2 really set the market off. That's why, currently the 2-year gilts, so 2-year GBP bonds are higher by about 30 basis points, like 29 basis points, I think, at the moment. They were a little bit higher earlier today, and that's really is what's roiled the entire U.S. market. When I came in and I sat down at my terminal this morning, 2-year yields were off, U.S. 2-year yields were off 17 basis points. Now we're only off, 4. And this happens pretty regularly, right, where you'll see that effectively the tail wagging the dog, right? Obviously, U.S. Treasuries are the global benchmark for interest rates. That's still the case. But when you have something that happens in Japan or something that happens in the UK that really sets off the developed market interest rate complex, that filters into U.S. Treasuries overnight because people just sell risk and sell whatever's liquid and they can sell. But then once you get into U.S. trading hours, then, I don't want to say cooler heads, but kind of more rational heads prevail at that point.
So how are you rethinking everything now, given what Powell said, given what we heard from the BOE, the ECB this morning as well?
Yeah, we had thought that the Fed would probably cut interest rates to just below 3%. Just the way that we were thinking about it was, real yields. The Fed thinks that the real funds rate should be about 100 basis points plus or minus a little bit. So if inflation is going to be 2.25, which is what we were implying for the PCE deflator for year end, that they would be able to cut interest rates down to 3%, more or less. Well, guess what? The inflation situation is far different now than it was before. I don't think they're going to hike because they don't want to necessarily be the impetus for a major recession. But I think that they're going to be much, much more cautious now in their easing campaign. And if they ease, what would cause them to ease at this point? It has to be the job market, right? You have to see like negative 100,000 job prints for 2 or 3 months. That would certainly scare them and make them probably rethink about a cut again. But when inflation expectations are rising as dramatically as they have the last 3 weeks, that's going to let them, take their foot off the gas just a little bit.
Scarlett, we have Ira in studio.
I know, this is so unusual.
So what that tells me, I deduce that someone is buying him a meal today. Lunch or dinner is my guess. To get these guys out of the Princeton office, where it's a great office, number one. Number two, great food. Great bunch of people down in Princeton.
Where are you going for lunch, Ira?
So actually, I'm not having lunch. I have a meeting with a client at 2:00.
So he says.
So what I do is I try to come in and schedule my client meetings when I can come and see you.
There you go. That's the right answer. Ira, thanks so much for joining us. As always, he's the best on that whole interest rate thing, where that stuff is going. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Just looking at the bond market, again, kind of settled down here. We're at, where are we at the 10-year? 4.26%.
Now
It had been as high as 4.32%. So there was some movement here, kind of settling back down here. But it's all about oil. And I saw that report coming out of Qatar that the attack there impacted their LNG facility.
Yeah, I mean, this has entered a new phase, the war that is, and energy infrastructure is the target that everyone's looking at.
Yep, absolutely. We heard from Secretary Hegseth this morning. It doesn't sound like they're stepping down anytime soon. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The price of oil and gas jumping to the escalating attacks in the Persian Gulf, causing now, it appears, long-term damage to some of the major energy facilities. You have Brent crude right now 4% higher, 111.74. Natural gas, this is the European natural gas, as an example here, 14.6% higher right now. So the risk assets are falling. down 344 points. The S&P 500 down 43 points. And the NASDAQ Composite Index, that is down right now 185 points. Only 2 of the 11 major industries in the S&P 500 are higher right now. That's energy and utilities, not surprisingly. Dollar DXY just below 100, 99.71 at this point. And then the 2-year yield, it is at 3.83 as traders are pricing out the chance of a Federal Reserve interest rate cut for this year. One of Eli Lilly's most highly anticipated experimental medicines has helped diabetic patients lose more weight than any drug currently on the market. This according to Lilly in a presentation this morning. This is an important story. The Federal Reserve has unveiled proposals to relax capital requirements for Wall Street banks. Could potentially unleash billions for lending, buybacks, and dividends. The Board of Governors at the Fed, they're going to vote formally to propose the plan, later today. And tensions building between the U.S. and Canada.
Oh, no.
Again, Jack Hughes wants the puck from his golden goal at the Winter Olympics final, but it's on display at the Hockey Hall of Fame in Toronto, Canada. The international.
He wants it for his dad. He wants to give it to his dad.
And I got to imagine it's, fetch a nice price at auction, but the International Ice Hockey Federation says the puck belongs to them, and gosh darn it, they'll put it wherever they want.
Well, it's at the Hockey Hall of Fame, so it's not like it's, behind closed doors, inaccessible to the public. You have to
why
pay.
haven't I seen a tweet about this? Anyway,
give it some time.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Also, the puck used to score the game-winning goal in the women's final against Canada, also at the Hockey Hall of Fame.
I left that out. I'm sorry.
In Toronto.
In Toronto.
Have you been?
Yes, several times. Yeah, of course.
She
I can show
makes
you
her
pictures later on.
pilgrimage there.
Yes, exactly.
All right, let's talk about these markets right now because according to strategists at JP Morgan, investors are getting complacent and they are making a high-risk bet by assuming there's going to be a swift resolution to the war in Iran. And in fact, the strategists say that investors are failing to price the potential economic damage from soaring energy costs. They're too fixated on what it means for inflation and less concerned about what it means for demand destruction and slowing the economy. So let's bring in Mira Pandit, global market strategist at JP Morgan Asset Management, to discuss how she thinks about this. Hey, Mira, great to speak with you. If the case is that investors are kind of focusing on the wrong consequence of rising oil prices, what does that mean for how you allocate right now?
Ultimately, when we think about risks in the market, you hedge against the risks you know, and you diversify against the risks that you don't know. And when we think about the hedging going on in markets right now, you're actually seeing that areas where you would expect to have some hedging benefits, like gold, have had a losing streak. And by the way, this is not inconsistent with what we saw back in the 2022 oil price spike, when gold had a losing run from about April through the fall, around October timeframe. You look at the dollar, that has done a better job of protecting, while Bitcoin and crypto has made headlines as a better diversifier or hedge. That has also failed to really hit the mark after sliding in the beginning part of the year. So ultimately, we're thinking diversify against these risks, because you're still seeing opportunities across the market in value as the AI trade shifts from that growth to value, in international as areas like Taiwan, Korea continue to benefit from the AI trade as well. International value when you look at industrials and banks. So there's no shortage of opportunities to diversify here, whereas some of the hedges have honestly been a little bit less consistent.
So we've heard, or we are hearing from approximately 17 central banks this week. We had the Bank of England today hold steady, the Fed hold steady, but the Bank of England was kind of hawkish there. What's the theme you're taking away from some of these central banks we've been hearing from this week?
The central banks are, while remaining on hold broadly, still attuned to the risk around higher headline inflation. And as you mentioned, that spillover effect, because eventually if headline inflation becomes high, that does start to impact how consumers spend. If food and energy prices are expensive, they may cut from other areas. And then you start to see that demand destruction feed through. Now, look, in the US, we do have a bit of an offsetting factor here with elevated tax refunds. But with natural gas prices up higher and the price at the pump rising by almost $1 relative to prior to this crisis, that could neutralize some of that positive fiscal impact that we then do see. So when you think about it from a central bank perspective, they are worried about that headline inflation becoming more of a growth issue. But it was interesting to me to hear from Chair Powell and also to see the projections going forward around inflation that not only headline inflation looked higher for the year, but core inflation does as well. And Powell said it's too early to think about looking through the oil issues when we still have core goods rising in tariff-related challenges. So ultimately, there's a war on both fronts, on the headline and the core front, which is creating some challenges for how much central banks may have room to normalize rates this year.
And of course, inflation, oil really dictates how policy goes. But perhaps, as Ira Jersey was telling us, the key for the Fed to continue cutting rates will be a job market that really falls apart. And we don't have that right now. How are you thinking about the labor market, especially when it comes to companies and they're announcing expense cutting programs and job cuts?
It's still a labor market that is frozen, but not quite melting down. We're still in this no hire, no fire environment where, yes, you are seeing some more job cuts on the margin, but you look at initial claims this morning, even continuing claims, while they ticked up a little bit, they're still relatively well contained, implying that the labor market is not particularly strong, but it's not really falling apart. Now, notably, the Fed did remove from its statement the stabilization in the unemployment rate, and Chair Powell did make a note to say we're basically at zero job creation. So if you're existing in this very tenuous equilibrium between low supply and low demand, we may not be able to rely on that forever, but at least for now, it does seem like the Fed can wait a little bit longer before they have to cut because we're not seeing meaningful signs or broad-based signs of labor market deterioration.
Mira, as global market strategist for JP Morgan Asset Management, where do you guys globally see the best opportunities right now with all of the uncertainty out there?
Right now, outside of the US, there's still very much a structural case for international equities. And it's not just over time the dollar will fall, over time valuations will fall, because as we've seen, the dollar and valuations internationally and locally have not worked in the favor of equities this year. But those structural cases still run deep. If we think about the developed markets, areas like Europe, Japan, that fiscal spending continues to drive areas like industrials, banks, defense higher. So it's very much an international value play in the developed markets. And then when we think about the emerging markets, it's all about Asia and not necessarily the usual suspects around India and China, but more around the Taiwans, Koreas of the world, those critical nodes within the AI supply chain that have really produced some pretty spectacular earnings growth. So we are following the earnings growth, and generally that has meant the cyclicals in the developed markets outside of the US and the tech and growth stories in the emerging markets outside of the US.
All right, thank you so much. Mira Pandit, global market strategist at JP Morgan Asset Management, giving us her view on the markets. She likes looking overseas, markets like Taiwan and Korea, particularly attractive right now. All right, let's stay with this global theme because FedEx reported results, and clearly it's not just a barometer for the U.S. economy, but really for the global economy at large. Lee Klaskow is our senior transport, logistics, and shipping analyst, and he is joining us to give us a preview of what FedEx is likely to say. So, FedEx, Lee, when it comes to FedEx, they have their own issues, right? They've been trying to turn things around, overhaul the business. How much of the results reflect that effort versus what's happening globally?
Yeah, I mean, we all have our own issues, but FedEx certainly does have a number of them. And, you know, they've been busy trying to restructure their European business. And, you know, they're kind of combining their ground and express networks. And they're kind of going through a transformation right now, and they're really hoping that they'll come out of this transformation a more nimble parcel provider that can really take advantage of some of the strong B2B markets that they're going after and higher margin B2C business also as well. You know, volume looks like it's probably going to grow during the earnings. We're not really expecting that much new news because they just had an investor day the other month. But we do expect to get a lot more color about what's going on in the Middle East and how that's going to impact FedEx and its business going forward. So that's what, you know, I'm most interested to hear about. You know, the company, like I said, does have a large European operation. You know, the Middle East has become a huge hub for freight between Europe and Asia, and that has been dislocated. And so they're obviously dealing with higher costs associated with some of that business. There's lost volumes that'll be involved because the area is not safe to fly into. So we expect to get an update on how the you know, the conflict in the Middle East will unfold for carriers like a FedEx.
So what's FedEx saying today about just their business in general in terms of volumes and things like that? I mean, because it's such a bellwether for many parts of the economy, as you well know. What are they saying just about core fundamental business trends?
Yeah, so FedEx has two main businesses. The business that we all probably know when you get something at your doorstep, letters going to lawyers' offices, and they also have a less than truckload business. They're the largest LTL carrier in the United States. They're actually planning to spin that business.
Yeah, I would spin that out if I were them.
They are spinning that out. They're doing an analyst day next month. We're excited to attend that and find out more. But that business has been suffering significantly because of the weak industrial economy. I don't need to tell you, the ISM has been in contraction territory a lot more than an expansion territory over the last 2.5 years, and that's really weighing on that business. But pivoting towards their larger business, their parcel business, that business has been okay. It's growing. Volumes are growing by low to mid single digits. They're getting pricing in low to mid single digits. The problem that they're facing right now is costs, and they're trying to kind of, if you will, reduce their overall cost curve to help drive better margins going forward. And some of the things that I kind of alluded to earlier, whether it's restructuring their air network, whether it's combining their ground and air network, these things will benefit the company. A, in a better demand environment globally, and B, it's going to take time for those benefits to come down to the bottom line.
So, Lee, we have FedEx reporting, and then UPS will report probably in about another 5 weeks or so. How much of what FedEx tells us, especially when it relates to global trends, can be applied to UPS?
I think a lot. They're both very, very similar. They're both going after similar growth businesses. They both want to get more into healthcare, logistics, which tends to be more profitable. They obviously have their finger on the pulse of the consumer. UPS is tied to a little more to companies like Amazon. They are trying to wind down that business, but they're more tied to it. There are some differences, but I think there's more similarities than there are differences about what it's going to tell us about the overall economy.
Lee, thanks so much for joining us. Lee Klaskow, Senior Transport Logistics Analyst for Bloomberg Intelligence. Lee also hosts a weekly podcast, Bloomberg Intelligence Talking Transports. So some good stuff there. Coming up, we're going to check in with this market, which continues to sell off here. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So it's the price of oil and natural gas jumping because of the attacks in the Persian Gulf. And now there's word these are going to cause long-term damage to some of the major energy facilities there. Yields are pushing higher as the war raises the specter of rate hikes by central banks. Right now, the S&P 500, 38 points lower. The Dow down 346, NASDAQ 100, 157 points lower. Brent crude is up 4%, 111.79 a barrel. And you have European natural gas among the standouts. That is up close to, 16% right now. Newmont, the miner, worst performer in the S&P 500 as you have metals decline. Micron Technology warning it's going to need to spend heavily on production to meet demand, with capital spending exceeding $25 billion this year. Right now, Micron down 1.9%. Newmont is down 7.2%. And Dan Skelly at Morgan Stanley, meantime, says, you know what, the backdrop for investors really isn't all that bad.
You got to recall that prior to the Iran conflict, which I don't want to diminish at all, we had a really solid exit rate with fourth quarter earnings, right? And we saw earnings growing double digit again, and we saw, importantly, a broadening out. Beyond that, we still have healthy corporate balance sheets and healthy consumer balance sheets for the most part.
Sales of new U.S. homes falling more than expected in January to the lowest since 2022. By the way, the median sales price of a new home, $400,500. This will get you like a studio apartment on 333rd Street around here. Are you happy? Finland is once again the world's happiest country. The U.S. actually ranks 23rd, this at least according to the 2026 World Happiness Report, which also warned that heavy social media use, especially passive scrolling, is harming young people's mental health, making them unhappy.
Not just young people. I think I'm going to say everybody below the age of my age and below.
Yeah. No.
Everybody.
What, using devices and being addicted to screens?
Oh, yeah.
Senior citizens
absolutely.
are totally addicted to screens. You should see my parents. They're
Yeah.
like scrolling on their YouTubes and listening to it at full volume and sitting next to each other.
That's crazy.
Them and
It's
toddlers.
Yeah, no, it's the new human equivalent of picking ticks out of each other's hair. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com as well. One of the trends that was impacting the market was a sell-off in a lot of software companies as it relates to because potentially threatened by AI. That was certainly a theme, continues to be a theme in this marketplace as people get a better understanding of what AI is and what it can mean for across the economic spectrum. One of those is our next guest, Sukhinder Singh Cassidy. He's the CEO of a company by the name of Xero, Xero. It's a New Zealand-based accounting software company. It is trades on in Australia. I'm looking at the stock here. It is down about 30% year to date, but that's pretty much in line with a lot of software stocks here this year. Sukhinder, thanks so much for joining us here. You guys are an accounting software company. Is AI a friend or foe to you?
AI is definitely a friend, and I'll tell you why. And just to give some context on Xero, although we are Kiwi-born, we operate in 180 markets globally, including here in the U.S., where we are one of the larger accounting players and software players, cloud-based, as well as UK, Australia, New Zealand, South Africa. So we may come from New Zealand, but a pretty large footprint of almost 5 million small businesses and accountants around the world. Why is AI a friend? Well, to be honest, we are the builders. We are the tech partners to small businesses around the world. They are often short on time and looking for more productivity. So Xero itself was born from tech disruption, in the movement from desktop software to the cloud. And we pioneered the idea of collaborating with your accountant or your CFO on software that lets you see your profits and losses, do your bookkeeping, be your system of record, pay your taxes, pay your bills now with the acquisition of Melio. So for us, we love AI. AI allows us to build amazing new software for our customers who, quite frankly, as I come back to, are short on time and really want to focus on their core business.
And what's been the take up among these small to medium-sized businesses? How cautious are they initially? How aggressively are they applying it? Are they embracing it?
Yeah, so look, our own AI stats are actually quite exciting. So I'm going to separate out into two types of AI because I think people often don't take the time to do that. It's important. Number one, we have about 2 million customers who use traditional AI on Zero. What do I mean by that? Suggesting what category, an expense should go into. I mean, scanning your bills, just OCR technology, machine learning. And then we have about 300,000 and growing on features within the last year. And by this, I mean generative AI features, our chatbot, more recently, effectively automated bookkeeping. So we are bookkeeping software, right? But the ability for your bookkeeping to just be auto-reconciled, that thing you hear about, which is agentic AI, by that means like, hey, you just wake up and it's done for you. So we're seeing very fast take up of our newer, what I call agentic features. But overall, about 2.3 million, excluding customer service, of our customers use some form of AI from Zero today.
So Kinder, who are your competitors in this space and what's your competitive advantage?
Sure. So globally, quite frankly, the competitor that people would note would be Intuit. I would note that if you think about Zero is probably far more global than Intuit. We lead in many markets outside the United States. We are the leading software provider in the United States. We are a challenger to Intuit, but we're used by almost 500,000 businesses here in the US on both Zero and then our recent acquisition of Melio, which is one of the leading cloud-based providers of software to pay your bills. So our competitive advantage alongside it is very easy to use, creating quote unquote magical experiences through technology. We love that. That is our brand. And I'd say in many ways inclusive. We work with not just the small business, but also provide technology to accountants and bookkeepers who are often partnered with small businesses to pay their taxes, do their profit and losses, increasingly give them advisory services. And so we seek to power both communities through AI.
Enterprise software has been a tricky industry to navigate over the last couple months with a lot of concerns, as Paul was mentioning earlier, that it would be disrupted, displaced by AI completely. There's a lot of talk among investors, expectations certainly for consolidation in this space, especially those that are most vulnerable to the AI disruption. Where do you think we are in that? What's preventing the M&A boom from really taking off right now?
Well, I think we're in an interesting place, and we have long been a consolidator of great technologies. As I said, the acquisition of Melio for right here in the U.S. market was a $2.5 billion acquisition completed by us maybe 3 months ago. So we definitely see ourselves as someone who can take advantage of M&A to keep adding world-class capabilities to the platform. But if you think about that broader market, as you just noted, software multiples are down because the market right now cannot discern, I would say, between where are their deep moats. We think of ourselves as a system of record company. We hold, the critical financial information of all our small businesses, and they count on us for it to be trusted, private, secure, connect with their bank, connect with the tax authorities, what have you. So I think the market's not discerning. Multiples are coming down. What do I think it will ultimately mean? I think it will mean an M&A market for those who aren't able to get public. I think the stakes on getting public have now gone up again. I think you are going to need to prove to the market if you're a private company on why you are going to be a net AI winner. For us at Zero, we believe AI, as I said, is a massive tailwind to our business. And so we see ourselves in a position to continue to use M&A to keep playing offense.
So net, what type of investments do you make in AI for your business?
Well, as I said, remember, because we are traditionally a system of record company that holds and processes your data, we've been doing traditional data science and machine learning for 20 years of our 20 years of existence. And AI has been a big investment for us for the last 2 years, mostly, if you think about it, first and foremost, to bring a whole new way for the customer to experience the product. Like if you think about what's happening for you as a consumer today, you're getting used to just asking questions, right? Natural language interfaces. So of course, Jax, which is our super agent on Zero, allows you to ask natural language questions, but Jax also processes your bookkeeping. Jax tomorrow will help you chase your bills. So I think the way we think about, that environment is our job is to make AI accessible for our customers. And in many ways, they follow some of the consumer trends and how they're going to want to work with AI.
Sukhinder, thank you so much. Sukhinder Singh Cassidy, CEO of Zero, joining us from San Francisco. We're looking at markets, at least equities, in the red right now. The S&P 500 down 0.6%. This is Bloomberg Intelligence on Bloomberg Radio in New York. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com. Let's look at Brent crude here, up $3.50, about $110 per barrel. Earlier this morning was at $119 per barrel, as the war in Iran has some rippling effects throughout the region, including some of the refining areas and energy fields in that part of the world. So let's get the latest there. Salih Yilmaz, senior energy analyst for Bloomberg Intelligence, based in Dubai, joining us via Zoom from Dubai. Salih, you're right there, right in the middle of it. I hope you're staying safe, and all the folks in that part of the world. Talk to us about how you're viewing where this energy situation is going to go here. We're at $110 for Brent. What's that mean to you?
I mean, I'd say we're still on an escalatory path. So there were three things that we highlighted at the beginning of the war that we were watching for the oil markets. And the first one was Strait of Hormuz, whether it gets closed or what happens there. And then it's essentially still at a standstill. That's very important because about 20% of global oil flows go from there. And this is obviously very consequential. The second one was that if that happens, we would be watching the shut-ins in the Gulf producers. And that number, I mean, that is already happening as well. And that number is getting close to 10 million barrels per day, which is very significant. I mean, it's these Gulf producers that are running out of storage. They can't move their crude. They can't store their crude. So they have to shut in production. And the third one, very importantly, was the third thing that we were watching was damage to energy infrastructure, damage to oil infrastructure. And this is what we are also seeing right now. And I think all of these three things are quite important and very consequential. But perhaps the third one, energy infrastructure, if we do get more of those and if we do get lasting damage to infrastructure, that's potentially one of the worst things that could happen, because then it would really take months, I mean, in some cases, maybe years to get that production back. So all of this is obviously bullish for prices. But what we're seeing with the Ras Laffan, I mean, that's an LNG facility, but it kind of shows that these type of targets are very much on the table now.
Yeah.
It's definitely bullish for prices as well. And that's what we're seeing in Brent and other benchmarks this morning.
Right. And it's that damage that has prompted President Trump to call on Israel and Iran to stop attacks on energy facilities. You mentioned Qatar's Ras Laffan. It's the world's biggest LNG plant. We're told that it suffered extensive damage. What does that mean, practically speaking, for countries that might rely on the LNG that it processes? Just kind of walk us through what that means.
Sure, and I mean, it's not good because Qatar is a massive producer of LNG. It's a massive exporter of LNG. And I mean, earlier today, what we heard was, as you said, extensive damage. We didn't really know what that meant. But in the last hour or so, I mean, the headlines that hit the Bloomberg terminal was that there is about 17% of the whole facility that's damaged. And what was really surprising to me was that the CEO of Qatar Energy said it would take up to 3 years to fix this damage, which is, I mean, definitely longer than I would have imagined. And we haven't really been given any other details. But for countries like, especially in Asia, that rely on Qatari LNG, I mean, places like Pakistan, where it takes almost all of its LNG from Qatar, I mean, this is not good. And it's definitely, I mean, it's almost certainly going to result in much higher gas prices there, and it's obviously going to translate into much higher living costs I mean, Pakistan is just one example, but in many, especially Asian countries. But I mean, you could argue that this is almost a leading indicator. I mean, the longer this war goes on, it would trickle down to other regions as well.
So give us a sense on the other side of this, Salih. If President Trump decides, all right, I'm bored with this, I'm going to claim victory and we're going to end this thing, how long do you think it would take for oil to return to a more normalized level, do you think?
I think, I mean, at this point, it would take at least weeks, I would say. I mean, it's hard to tell, of course. I mean, if you asked me in the earlier days of the war, perhaps I would have said, a few days, the supply chains haven't been disrupted that much, it's definitely not good, but it would have been okay. I mean, now we're into the third week of this war. And, I mean, as you know, oil and the oil derivatives are essentially in everything that we use in our daily lives. And this is very disruptive, not just for crude, but also downstream from there for refined products, for petrochemicals, and for many other industries. So it's all disrupted. So I would say it would take weeks, if not months, to get back to the pre-war levels.
And just a quick mention, you talked about shut-ins, producers halting production essentially because they can't store any more fuel. That takes a long time for them to restart, right? It's not like it's as easy to restart as it was to shut down.
No, you're absolutely right. I mean, in these fields, if you lose the pressure, it's not as easy as just flipping a switch and getting that production back. Like I said, it's not as bad as, I mean, this is perhaps obvious, but it's not as bad as getting a direct strike on these facilities and actual damage that needs to be repaired. I mean, that would be much worse. But you're absolutely right. It's not just turning it back on. It would take some time to get back to previous levels, to anywhere near full capacity for these facilities.
All right, Salih Yilmaz, thank you so much for shedding some intelligence on what's happening here with the energy infrastructure in the Middle East. He is our Bloomberg Intelligence senior oil analyst joining us from overseas. He is based in Dubai. Paul?
Absolutely. He's right in the middle of it for sure. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast. 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. John Tucker with us as well. Oil prices, they continue to rise, which means stocks continue to decline. And this comes just after Fed Chair Jay Powell made clear that there won't be any rate cuts until inflation starts to ease more. And that's all before it folds in what's happening with Iran, with the war taking place there. So a lot to get through there. And we're going to tackle all of it with our lineup of guests. Becca Wasser is our defense lead for Bloomberg Economics to give us the latest on the conflict in the Middle East. Jake Silverman is our semiconductor analyst to recap earnings out of memory chip maker Micron. These memory chip makers have seen a lot of demand because of the AI boom. We're also going to check in with David Kudla. He's the founder, CEO, and chief investment strategist at Mainstay Capital Management, to get his sense on where you invest, how you invest. And Michael Halen, he is our senior restaurant and food service analyst, will join us to give us his analysis of Darden Restaurant's latest earnings. Promotions are a big part of it. First, though, let's bring in John Tucker for our Bloomberg Business Flash. John.
All right, Scarlett and Paul, the big worry now, central banks are going to have to raise interest rates to keep under control interest rates as the war continues. The worry is, well, the highlight came with the Bank of England that filtered over to the U.S. with the 2-year yield higher. Right now, it's paired some of the earlier moves, but the 2-year 6 basis points higher right now, 383. And Iran maintaining a tax on energy assets with some long-term impacts, it appears at this point. Brent crude right now up 3.4%. 111 a barrel. WTI up 1.25%, 97.49. And then you also look at European natural gas. That is a 13% pop today. The overall equity markets, S&P 500, 40 points lower. That's down 0.6%. The Dow Jones Industrial Average down 372 points. And right now, the NASDAQ Composite Index down 151 points. Industrial metals, they also tumbled. Aluminum down the most since 2018. Again, the war in the Mideast pushing energy prices higher, increasing the risk of damage to the economy. Right now, the worst performing stocks in the S&P 500 miners. You have Newmont, that is down over 7%. Meantime, Lakshman Akathan at the Economic Cycle Research Institute says even before the rise in energy, inflation was a worry.
Over the last several months, there's inflation cycle upturns. That's very different than energy. That's broad-based, and that's happening in the U.S. And on top of that, you're getting this oil shock.
Yeah, this is an interesting story. The Bloomberg, the $80 billion diamond industry kind of losing its sparkle as prices plunge.
Lab-grown diamonds.
Yeah, I guess.
It's amazing what's happening in that market.
Yeah, it's a number of factors. There's the luxury slowdown in China. As you mentioned, the lab-grown competition and Russian sanctions. De Beers, for instance, cited in this story, bled almost $1.5 million a day last year because of this. And I don't think it's unfair to say De Beers is, a cartel. They were the price setters for the market, and they would then dole out how many diamonds each dealer would get. So, take that for what it's worth. Pick up some cheap diamonds, Scarlett.
Are you in the market?
I know where you're going with that question. We check the markets for you all day long, right here on Bloomberg. I'm 63.
I don't know. I mean,
I'm
you're
setting
the one
my ways.
It's a new 53. Come on.
Anyway, back to you guys.
All right. Thank you so much, John
Let me ask you,
Tucker.
Scarlett, would you differentiate between a real diamond and a lab-grown diamond?
Probably not. I mean, I like the fact that my engagement ring was a real diamond, but I'm not opposed to a lab-grown
I
diamond.
wonder what the youngsters are saying about that.
I think they're going with whatever's affordable.
Right. Yeah. Good point. Okay.
And they're a lot more price sensitive, given the times that we live in right now.
Yep.
Compared to us old folk.
Exactly.
All right, let's check in on some stocks on the move this morning. It's 11 a.m. Wall Street time. I'm Scarlett Fu with Paul Sweeney, and Bloomberg's Matthew Griffin joins us. Matthew, would you be more inclined to look at a lab-grown diamond and say, yeah, this is as good as a real diamond?
Scarlett, I can't remember why. I was actually just thinking about this. I am not in the market, just to get ahead of that question at this time. But I think no. That's my instinct, but I have not really.
You haven't looked
been
into
forced to make a call yet.
That's a conversation that has to be had, I think.
It really is.
Okay.
Yeah.
All right.
I mean, the hearts can be broken over this, right?
Sure.
All right. Let's talk a little bit about some stocks on the move, Matthew. What have you got for us?
Well, I know you are going to talk more about the numbers on Micron in a bit, but I think it's worth looking at the stock here and what it tells us about where investors' heads are. So that's ticker MU, down about 2.5%, was down as much as 8.8% earlier this morning. And what's really driving sentiment there is this forecast for capital expenditures. They expect that to be greater than $25 billion this year. That's more than the $22.4 billion that Wall Street was expecting. And it really shows how much focus there is on AI spending right now and how much skepticism there is about it. This is a company that's seeing booming demand for the memory chips that it manufactures. They're used to train and run AI models. Shares up 340% in the last 12 months on that demand. They're seeing that flow through to revenue. But again, investors are a little bit concerned about the high spending that you need to do to meet that demand right now.
How about Rivian? What do you got there?
So Rivian, that's ticker RIVN, up about 5% today after the company and Uber announced a robo-taxi partnership. So Uber says that it will buy about 10,000 Rivian R2 autonomous vehicles. Rivian, of course, they make electric vehicles. They're going to roll those out in San Francisco and Miami in 2028, eventually across the US, Canada, and Europe. And Uber also going to invest as much as $1.25 billion in Rivian. If you look around the EV space, companies having trouble selling them to consumers right now, but analysts pretty positive on deals like this. They've also been positive about Tesla's robo-taxi pivot. If you actually look at Tesla now, down about 2.3%, so maybe some competition fears there.
I mean, if they're going to add Rivians to the streets of San Francisco, they're going to have to share the road with the Waymos. That's going to be like a third of the cars there. There are a lot of Waymos on the streets.
I know.
There.
I took one in Santa Clara a couple weeks ago.
I don't like them because I feel like they don't know how to make a left turn. They kind of wait too long, and you got to get in there.
And so's my driver this morning coming up the Parkway. I mean, I can't make the difference. All right, one more. FedEx. We got earnings coming out after the close.
Yes, and FedEx down about 1% ahead of that report. Now, that may be with the market, the rise in oil prices, but that's also what's in focus when the parcel carrier reports earnings later today. That stock, ticker FDX, surged at the beginning of the year, set a series of record highs, now down about 11%, though, during the war. They're closely tied to the strength of the economy, seen as an economic bellwether, and their report and outlook are going to give us some clues about, first, how strong was the economy heading into the war, and second, what is the company seeing? Are consumers and businesses pulling back on spending as energy prices surge? So that's one that strategists and analysts tell me they're watching closely, one I will be watching closely as well.
All right, good stuff. Matthew Griffin, thank you so much. Matthew Griffin with our Stocks on the Move. He is our Bloomberg Equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Okay, I've stopped counting, but I believe we're day 20 in the war in Iran. Third weekend, either way. And it doesn't look like things are easing up at all. In fact, we've entered new phases with attacks from both sides on energy infrastructure. Let's bring in our next guest. Becca Wasser is our defense lead for Bloomberg Economics on the latest in what's going on. And Becca, how do you think through the cost, the damage done to energy infrastructure and what that means for the cost of the conflict so far?
I mean, the costs of the conflict are huge. Already we are seeing an actual price tag put to things, whether that is military equipment, some of those expensive air defense interceptors. We're also now seeing critical infrastructure damaged as well as civilian infrastructure damaged in addition to that. So just those costs alone are quite large. When you layer in the operational cost and some of the sustainment cost, we are looking at billions and billions of dollars, as well as an impact to the global economy. So it's going to be a huge cost overall, depending on how long this goes for. But the most important cost is the one that we can't necessarily put a number on, and that is the human cost of conflict.
Becca, we here at Bloomberg Television and Radio took the Defense Secretary's press conference this morning live. His rhetoric remains very aggressive. Now that's starting to be matched by some of the rhetoric coming out of Iran as they step up their attacks on other Gulf states and assets there. Is there, in your world, any of your sources, do they have a consensus of perhaps how long this might last?
So nobody has any consensus. Nobody knows exactly how it's going to go. But, we have been working through various scenarios at Bloomberg Economics for how long this could go on and what the broader impact would be. And, my thoughts right now is that we are looking at the potential for a protracted conflict, a protracted low-intensity conflict where both sides don't necessarily come to a clear fruition. For Iran, this is an existential conflict, and the United States, and as you said, the rhetoric that we're hearing from senior leaders doesn't seem like it's going to stop any time soon. So with that, we're looking at a much longer conflict where you have periods of no fighting marked by sporadic in high intensity periods of fighting and continued strikes. So that's not necessarily a place where any of us want to be in for global security, but also for some of the economic impact.
What's the least likely but most high impact scenario that you guys have kind of drawn up as a possibility?
I think a ceasefire is probably the least likely scenario that folks are looking at. I think initial early days, it looked like there was some potential for that to happen. But right now we do see Iran being fully trenched and dug in. We see the U.S. From the White House to the Pentagon digging in their heels. And Israel continues to prosecute a variety of different strikes against different targets, both in the Middle East, but also moving further out to the Caspian Sea, as we've seen today. So with all of that, I don't think a ceasefire is necessarily in the offing, and that's why it's one of the lowest scenarios that we are looking at.
All right, Becca, thank you so much. We appreciate it. Becca Wasser, defense lead for Bloomberg Economics. She's based down there in D.C. One of the stocks we've been talking about today, Micron Technology, sales numbers really impressive. I think some folks are concerned about some of the spending that Micron was talking about on their earnings conference call. So let's get right to it. The stock is down 3% today. but it is just been a really strong performer over the last periods. Let's check in with somebody who does this stuff for a living. Jake Silverman, Bloomberg Intelligence semiconductor analyst. Jake, what was your takeaway from Micron's earnings?
Yeah, thanks. I would say that I actually think it's not really the spending that is concerning investors. I think really what's going on with Micron is more so a focus on where the cycle is at. We've seen now a couple of quarters of very aggressive price increases for the May ended quarter. We're going to see continued very strong double-digit pricing growth. And so what I really think is on the top of investors' minds is, when does this cycle end? All agreements to go out 5 years. Some might go 1 year, 2 year, 3 years. It's going to vary a lot by the customers, the volume, what the products they're requiring are.
All right, great stuff. Jake Silverman, semiconductor analyst, also Bloomberg Intelligence. Let's get some context around the stock price. It's down 3% today, but it's a big but. It's up 56%.
green and red flags. Red, you had no fuel. Yellow, you could fill up for $3 to $5, and green, you could fill up your car. So, I mean, this is the stuff that was going on back then that's very different today. Supply is available. You're paying a different price, which means it's a relative price story.
Ms. host Steve Ricciotto. European equities lower, checking trading in Europe. Right now, the Euro Stocks Index down by 2%. The FTSE 100 in London down 2.3%. The DAX in Germany down 2.6%. And the CAC 40 in Paris right now lower by 1.8%. Again, European natural gas surging 12.8%. Brent above $110 a barrel. I'm Charlie Pellet. Lots going on, Joe Matthew. That is a Bloomberg Business Flash.
All right, Charlie, this is turning into quite a day here. Obviously, the markets are listening very closely to what is coming out of Washington right now and, of course, the Middle East. The president just now speaking to reporters in the Oval Office alongside the Japanese prime minister who is in town. I was over at the White House a little while ago. I bumped into Tyler Kendall, as a matter of fact, who's going to be joining us from the North Lawn in just a moment. It's a hive of activity over there when you've got a visit like this, of course. The Japanese flag is hanging outside of Blair House right now, and a massive contingency of foreign press is in town for this. You just heard some of their voices, and of course they're going to be following her through the stages of this visit that has a couple of stops along the road here. The bilateral meeting just now getting underway following meeting the press, and they will resolve into a policy meeting later on today, and there will be a greeting and dinner later on. Dinner with the Prime Minister in the State Dining Room, 7 p.m. Eastern Time. Have you seen the menu yet, James? I haven't seen the menu today. I will tell you, it smelled really good. You know, when they're cooking up a state dinner at the White House, they start bringing everything outside the kitchen. They roll it in kind of near the briefing room because they need to make a lot of extra room. A lot of guys in white coats and gals in white coats. I don't know what they're making, but it smelled really good. Went running with Kaylee Lyons this morning, by the way, as just an aside. We checked all the checkpoints. The security was definitely busy today. One thing I learned, Kaylee has much longer legs than I do. Tyler brings us up to date now from the White House after what we just heard from the President of the United States. Bloomberg Washington correspondent ensconced in a day where we have the Japanese Prime Minister in town. Tyler, that seemed to go